And a very good morning to everyone, and welcome to the Triggercharts pre-market rundown for Friday, April 23rd, 2021. I'm Andrew Horowitz, and I am the co-founder of Triggercharts. Let's get that video going there. Hopefully, hello, how are you? Yeah, we're going to be talking about a lot of things. You can see on the right side of my screen right now. Well, we got the continued fallout of some of the questionable and very onerous taxes that are being discussed by the Biden administration. So right now what we have is a situation where it's a knee-jerk reaction to sell a few things like we saw yesterday, although the markets are popping up pretty well, at least a bit from yesterday. You'd think there'd be some follow-through on the downside, but we're not seeing that. Listen, can everybody hear me okay? I want to make sure, just somebody click me back in the chat. Also, use the chat to put your, yep, everybody can hear me. Use the chat to put your symbols, and we'll be happy to go through those and discuss those. Now, before we do that, I got to put the disclaimer out there. This discussion is for educational purposes only. It's not a recommendation to buy or sell any security. It is nothing more than a discussion of what could be and how our indicators are showing up from an area of a bias on the long side or on the short side, or neutral, where you have a consolidation. And basically what our indicators do and why they're so powerful and why they are the #1 rated in the overall rating for the Trading App Store for TradeStation is that they do something that's, I would say, simple but elegant. And what they do is they put colors on your chart, and the colors are not just a simple, okay, well, hey, it's going up, so let's do green, and if it's going down, we'll do red. No, there is a methodology that's pretty powerful behind all this. An algorithm that calculates each and every tick, each and every buy or sell, and looks at what the volume was on that. So if you think about it for a second, if someone's buying a stock at $50 per share and they buy one share, just one share at 50, is that as powerful as someone else buying it at 50 and maybe buying 10,000 shares? So when you add up all those buys and sells and you look at the volume of each and every tick, you start to get a picture where the buyers are willing to put their money to work or take their money out, and that then gives us a level. What's important about those levels is it then gives us a kind of a, I would say, an x-ray of the market. It gives us the heartbeat of where traders are working. And as such, we can see where they're not working. That's the important feature. Where they are not putting their money to work, and that provides us areas that have very low volume, usually what we call fast zones. There's two zones and two areas that we look at. One is called a consolidation, or a horizontal price through time, where price is really not moving. So you have this kind of movement back and forth, back and forth, back and forth, usually moves slowly over time on a horizontal basis. And then you got that vertical blowouts on the upside and downside, where you do see very, very quick moves, like right here, this blast up. You see this area right here. And what happens there is that you see that there is very quick movement. Why? We got above that line that was key resistance for some time. Really, if you look back on this particular chart a little bit further back, you would see there really wasn't a lot of movement on there. And then what happens? Now, I think it would be kind of interesting right now if, let's just skip over for 1 second and let's look at Bitcoin. That didn't work. There you go. So now look what we're seeing here. Okay, we're seeing this major move down, 49. Oh, I guess we saw down at 47. And that was kind of, if you look at this, there was some support here in this range. Below 46,100, we got a while to go for that. Below 46,100, there's really no support down to about 35,000 again. This is on a daily chart. Now, again, you can do this on any chart you want, but what we're finding is that we're in a long-term consolidation, broke out for a few days, and then turned sharply lower, and we're seeing that continuation down right now. Kind of switching this over to, let's say, a 30-minute chart. You see that you saw that breakdown right here, and then once we get below this level, if you look at this, this is really important. You start kind of seeing a picture emerge that it drops down, it just, kind of moves and holds there for a second, and then major slams lower, slamming lower. There's nothing to the left on this chart very significant. Look, I can go back a ways here. There's nothing in this area, and we're always looking for these kind of holes in the chart where there's kind of nothing out here, right? Down to the left, there's nothing in here. That is the key things that you want to look at in a chart. Now, right now we're trading at 40,253, trying to hold this overall goes a little bit higher. We'll kind of bring it up a little bit higher to about here. The range from about 5,300 down to about 49.2 right now. That seems to be a level that's very important. Below that, you probably see pretty significant moves lower into the range down. And then again, when we switch back to our daily time frame, again, this is for any instrument. It's not just Bitcoin. Okay, when we look back here, we said that 49,100 is kind of an important level right along this last area of high volume node. The blue is a high volume node. It's just simply the ability to connect these lines will really get you very far. Follow the rules. There's plenty of videos out there. There are plenty of tutorials, and there is an instruction booklet that comes with this. Actually, you can read that. So you don't have to watch a video. You can actually follow along and understand what's happening. But all of this is based on market profile that was famously put together by Peter Stottlemyre years ago, and the idea that you can actually find where this volume at price is for any security that has a volume, and therefore provide yourself with really good insights into where the action is. All right, that was a little bit off the beaten path, but something that I think is really important to understand. What is going on right now? Well, we got taxes. You kind of like a taxes. There's a big echo chamber right now because, well, the Biden administration wants someone to have to pay for all of the largesse of the various bailouts of the stimulus and now the new infrastructure plan. And rightfully so. Listen, I don't think anybody could argue that we have to pay back this debt, right? Nobody's going to argue that. But everybody's going to argue they don't want to pay it back. I don't want to pay it back. You don't want to pay it back. But we know we got to pay it back. We can't have $7 to $10 trillion of overhang hanging out there, slowing up growth for decades and decades to come. Problem is, who's going to pay this back? Is it going to be companies where they're going to raise the corporate taxes from anywhere from, they're talking about 25 to 28%. The new capital gains tax, talking about a 39% move to the capital gain on the long-term capital gains tax. Again, we have some basic details about this, not everything. Plus another couple of percent for high income earners, upwards of about 43% tax on capital gains. Looking at 39% tax bracket for high income earners on their basic income. That will affect some dividends, and that will affect potentially some dividends, and it will affect their regular earnings. We're talking about a tax hike on cigarettes. We're talking about a tax hike that's rumored of an 80% tax on cryptocurrency trading. Not exactly sure what that is, but you can see top right ticker right here. It's not really very happy about that. A lot of people saying, you know what, let me just get my profits out now. We still don't know if this is going to be, and well, let's be clear. We don't know if this is going to pass. There'll be a lot of negotiation, a lot of people that won't want this. Even if they vote pretty much party line, there's a lot of Democrats that probably wouldn't want this to happen anyway. So where we are now with all of this is at the shock and excitement and awe and panic about this. A lot of knee-jerk reactions at the selling. And what we're seeing here is, things like small caps doing better than large caps. Those that have made so much money over the last, number of years where there's built up gains. A lot of people have massive gains on Apple and Microsoft and Tesla and Netflix and, the names. Well, with that, they're probably going to say, well, if this is not going to be a retroactive tax, if it's going to be a tax that starts in 2022, not 2021, well, we need to start selling right away. And as such, they need to start kind of getting their positions out because having to pay 39%, double the tax, doesn't make a lot of sense. At least that's what the thinking will be. If, in fact, this does get passed, and if, in fact, this does get pushed to 2022, there'll probably be some selling pressure in the mega cap names and the names that have the biggest run-up over the last few years over the next several months. So just keep aware of that. SPACs are starting to show life. We saw some oversold conditions in many of the SPACs. You know the names. And many of them had pretty good days over the last few days after they got pummeled upon being pummeled because there was some concern about looking into how they are accounting for what they do, looking into the promotional aspect of this, the SPAC barkers that we've been talking about that have been involved here. And they really got hit pretty hard, came down, maybe rightfully so, due to the fact that a lot of these things really didn't have a lot to go on. Hope and a prayer for many of them. Some of the companies that did de-SPAC and go into a regular environment, possibly still had no earnings for years to come. They have a path to profitability, right? That path to profitability, which is those buzzwords that everybody wants to hear. But yet what has happened is that we did get these oversold readings and people started buying into them. And there was some really nice moves over the last few days if you were paying attention to those. Earnings season, we're right in the middle of it. Starting next week, we're starting to get some of the bigger names out there. We went through the financials last week, some of the staples this week. We saw Intel come out overnight, dragging a little bit, concerned about the ability to get supply and to actually produce the products that are in demand, which will mean, by the way, inflation. Prices will go up. When supply demand reaches an imbalance, as it has done with lumber for building, other products and goods, Procter & Gamble's raising rates on many of their staples, toilet paper and shampoo and Q-tips, probably the prices are going to be going up. So you have to realize what's happening there and why that is inflationary. A lot of people on Twitter, when I put up a chart on lumber recently, said, oh, it's only supply demand. You're really misunderstanding what's happening here, and it's not an inflationary condition because people need to get lumber. They want to buy lumber. Prices are going up because there's a lot more demand. It doesn't matter. The fact is, whatever the reason is for prices to go up, or if there is no reason at all and prices go up, that is inflation. Usually what happens during inflationary time is people look at this and you see that there is the velocity of money flowing much quicker. People are saying more quickly, hey, I want to buy that, overbidding for houses, going out and buying products and stocking up on them, fearing that prices will be a lot higher in the future. Just look at what happened during the pandemic, the beginning stages of it with many of toilet paper. Great example of toilet paper. Prices started going up also. Then you get the gouging, of course. Why? You have a supply-demand imbalance. That's what happens with stocks and bonds as well. When you start having an imbalance, you see it moving dramatically one way or the other. When the sellers are swamping buyers, or buyers are not willing, maybe it's not swamping them, not willing to pay up at that price, and sellers need to sell right now, or vice versa. That is very simple, and it is inflationary, so keep a watch on what's happening in that department. But we are seeing some earnings come out. They were kind of a mixed picture. I think that maybe a lot of people are looking at these as optimal levels where we have a price-earnings ratio forward of about 22, 23, and saying, how much better is it going to get than we have it right now? That being the case, we have to look at where we are in terms of pricing. And with earnings coming out, how stocks react is a big key right now, especially when they react to some of the guidance that's being proposed. And guidance is key. Fiscal stimulus, we have another thing that's coming in. Along with the taxes, they're talking about UBI. If you haven't studied this and looked at this, universal basic income. There is a proposal to extend, I don't remember the year, I think it's 2025. The basic extra payments to many households that meet certain income thresholds and keep on paying them, whether or not they have a job or not. Universal basic income. How fair is that? Not very. Listen, if you're somebody that could use it, that's great, and I feel really good for you. However, let's kind of look at the economics behind all this, and you have to wonder how that really is a benefit for bringing people back to work, getting the economy at full speed, or is it just, let's throw out some money out there, artificially move the markets, economic markets, that is, sales of buildings and household goods and cars and food and whatever, vacations. Let's get it out there so they can spend. And hopefully what that's going to do is do a reverse trickle down in a way. Let's get the money to the people that don't have the money, let them go out and spend and buy goods and services and things of that nature, rather than putting it to the rich. And hopefully it's going to trickle down into the economy, which never seemed to work either. But everybody gets money. Almost everybody gets money. You get money, you get a car, you get a car, you get a car. That's what's going on right here. And the question is, how does this end? I don't see it ending very well. The themes right now, inflation. Yes, but no. We have some inflation. We definitely have an inflationary environment. Looks like it's getting worse. However, the inflation numbers are still not ticking up to a level that people are too concerned. They are, I would say, worried to a point of, let's see what happens. The Fed has been talking about this transitory. We've talked about this before. They keep on pounding the desks. Next week, we have an FOMC rate decision on Wednesday, and I am 100% sure that they're going to talk about the transitory nature, even though the base effect that we talked about last week, where inflation is going to be compared to a year ago, is looking a lot worse. A lot of people are saying, you know what, maybe we should take some chips off the table. They're saying that, you know, right now it may be time that, wow, this thing has run pretty well. We still have massive cases on the rise for the pandemic. I mean, nobody's even talking about this anymore. Look what's going on in India. Look what's going on around the rest of the world. Look what's going on in the United States. Even though we have the vaccines, we are still seeing a significant rise, especially in younger people who were out maybe partying for spring break or whatever else is going on, or maybe they're part of the population that just hasn't got this horrible disease, this coronavirus, COVID-19. Whatever the reason is, that there is a significant amount of problems. I mean, right now, the U.S. just put a do not travel order. It's not an absolute. You can still go there. It's more of a recommendation to 80% of the countries around the world just this week. So, and that's not because of anything other than the fact that there's a highly contagious event that is going on around the world. Earnings season, and we have button pushing. A lot of button pushing. Buy, buy, buy. You got to do your research before you do so, and it makes a lot of sense to really take that extra moment before you push that buy button and look at the charts, look at the fundamentals, whatever it is that you utilize to buy. But the idea of button pushing is going on out there with eToro and Robinhood and all these other real instant access, easy to buy, no commission deals is really what is doing a lot of the driving right now. Economics, light week, really inconsequential for this week that I saw. There was not a lot of big deal. This week also we saw Intel came out last night, Snap beat, very nice. Skechers, Samuel Adams, hard seltzer is in demand. And SDX Seagate came out also. Some other ones too. Economics, next week, a pretty heavy week. We got durable goods and retail sales. Wholesale inventories, we got the big ones, which would be the FOMC rate decision, GDP for the first quarter, expecting probably close to 6%, and PCE prices, which is the preferred metric of inflation for the Fed, personal consumption expenditures. Here's some of the stocks we're going to talk about. By the way, you can get a 4-hour free course. Anyone who signs up who is new to the Commander series, the link is in here somewhere. See, there, it's in there. And take a look at that. Anybody that signs up for that, and just send us an email at support@triggercharts.com. You get a $199 value 4-hour course where you can do it at your leisure and play it over and over and over again to learn all about some of the basic core features of trading and what we talk about here. It's an evergreen program we did years ago, but it's great. It's just, it doesn't change. It's never going to change. Question coming in from Steve. What inflation, what level of inflation would concern you for the market? 3, 4, or 5? I think 2.5% is going to get people's ears kind of like, woo, you know, get them really concerned with what's going on with where we're going with that, because over 2% is one thing. And you got to talk about the annualization and the quarterly and sustained inflation that looks like it's over 2.5%. I think is going to be a concern for the markets. 3% definitely more concerned, not like hysterical. 3% will be a problem also. I'm more concerned about what's happening with bond yields. That's a bigger issue for me, because the inflation number may be able to be tamped down with a discussion by the Fed saying, hey, you know what, don't worry about it. We're not going to be increasing rates. And if the market believes that and really doesn't go against it, and we see a lot of buying of treasuries continue by pension funds and sovereigns and the Fed, I don't know if that's going to allow for rates to go up. Basically, once rates go up, that's the issue. So the question really is, what level of inflation is going to spark the Fed, like we saw with the Bank of Canada this week do, where they are talking about, you know what, not much longer we can do this for. We're really going to have to think about starting to raise rates. Fed is out to 2023, which seems like a pretty long period of time to have that going. All right, so put your stocks in there. I think we got one or two. I got to go up a little bit here. I only got one or two in here. I'm going to write the word here in the chat. Put your symbols. If we covered your symbols last week, don't put them in this week. Where are we right now? We got down 28 on the Dow Jones futures. The ES, which is the S&P futures, down up 5. Excuse me. Qs are up 23 after a major reversal yesterday. That was a big deal, that reversal yesterday. Let's take a look also. Kind of call those like railroad tracks, right? You know, you get those ups and downs and ups and downs. This is the SPY right here. Right now, the KRI is just a little bit it's close to equilibrium, we'll call it, a +1. We do see it rip a little bit hot here. You know, you're kind of seeing this kind of pattern here. That's what you're seeing here. You know, we're going to see it probably try to hold up for a while. I wouldn't be surprised if we test down to 398 again on the SPY. That's just me. That's not that far away, but that's me. Let's see. All right, let's go back here. Nope, not there. Here. This is the Commander series that you're looking at right here. 30-minute on the left. Oh, right over here. We got the daily over here. This is the aileron. This is an add-on. You also get the on the top here, which is the best part of this. This is the icing on the cake, the cherry on the top. What you have here is a multi-time frame charting system right there in front of you that tells you all you need to know. So we're looking at, for example, let's go to silver as an example, right? Something we've looked at, starting to pick up again a little bit, up 70 basis points today, 24.38. So we're kind of right about, right below an important level that it needs to break out from. And we've kind of boxed this and all that, but we're seeing this nice move to the upside here, which is giving us a really nice satisfaction that the potential is that we're seeing a significant amount of momentum up higher. And this is in the face of what we're seeing here. Bitcoin about to break 49,000. We told you there was some downside. We looked at that before, right? It looked like there was some clear downside if you saw any kind of breaking from the levels we were looking at initially. So I wouldn't be surprised if we do see a try to hold at 49, these round numbers the Bitcoiners love. But you start getting down there and going below a little bit, and that can happen very quickly with Bitcoin. I mean, don't mess around. Don't forget there's massive spreads in there. So keep a watch on that. Don't focus only on that. Let's look at the charts, but I'll keep a watch on that for you up there. Basically, what we're seeing is that you have a situation where silver is starting to move up. The aileron gives you the momentum. Up top here, when we look across, we see there's nothing on the 30. See, we're looking at a daily chart, but there's nothing on 30. We're in a consolidation pattern right here, right? And we're in a neutral positioning. That's why it's gray right there. It shows you that there's no trade. There's no bias right now. Same thing right here with the 60. Same thing here. So basically, where's silver? Silver right here. Long on the 240. 8 bars long on the daily, and weekly is nowhere to be found. So what you have right now is just a daily, not a lot of confirmation. But the point is it gives you a really good level. Always, when I've talked about this 100 times, if I talked about it once, we always look from right to left, like this. We look this way. Even in the chart, we're looking always right to left. We're going to see what's behind us, where we have those holes, where we have those consolidation points, where we have the resistance support, which is really important. Draw lines, and then look here on the top where we have the opportunity to find, okay, very quickly, we go from weekly to daily to 240 to 60, 30. These are changeable. These are customizable. This is what we're using for the discussion here. So bottom line is when we look at this, we see that that there's just one short. Let's look at MUDs. This is something I talked about. It's a SPAC, a very interesting SPAC because Topps, the playing cards, got involved with this. It rolled into this SPAC. They'll unroll it soon. It will be probably a full range. They'll change the name to Topps or something like that eventually. But basically what they're looking at, this is possibly a play on the NFT area. The whole NFTs, non-fungible tokens, where they may be able to sell Topps playing cards through non-fungible tokens. Kind of an interesting possible scenario. Something we looked at, it's very much a long shot, kind of trading all over the place. Had that big rip and lift after the announcement from the $10 range, which is usually what you see with the SPACs. And then it kind of came back, got right down to its level. Look at that, perfect bounce off of that point of control right there, or the high volume node, if you will. And then bounce back up. Right now, trading down just 10 cents today. Space, what a disappointment. You know, we saw that there was some selling done by Chamath Palihapitiya, and then he's a SPAC barker, of course. And then we saw that Richard Branson sold. Then we saw that Kathy Woods in her space ETF sold. The day after that, of course, it was it. Where else is it going to be sold from? It started popping up. We talked about this last week that we saw the momentum was kind of down. It was, on the aileron. It wasn't looking great. We could see that from the chart here. Leveling off here at a long-term level. Let's pull this down. Right about there. Right there. Give or take. 1930 or so. Trading where now? Right now, 22. So yeah, there's your break of 49,000, by the way, for Bitcoin. So they'll try to probably bring it up for a minute, and then they may kind of slam back down. That's kind of how this thing works. You all of a sudden get people like, oh, I got to buy it right now. It's a dip. Let's buy the dip. And all the, Bitcoin and crypto priests are out there evangelicalizing or talking it up. So usually, there you go, it's 49,000 again. I would expect you'll see that and then a dip below it. They'll try to hold it here for a while, then kind of crash it down probably. I would expect the lows probably to be hit at least once today, which was, I think, another 1,000 points down, but still getting crushed and crunched pretty well. SNBR, this is Sleep Number. I thought there's 2 days ago they came out with the earnings. This stock came from 150, probably overdone for mattresses. Everybody's a mattress. Look at Purple and Sleep Number, and there's just tons of them out there. So when you look at, this is sitting on a ledge. You see that ledge here on a daily basis? Let's kind of go here. Look at this ledge, right? There's a sitting. Earnings came out. It could have gone either way. Had the opportunity to possibly get up to about 130 again, but just failed. Came out with some earnings that were just not pleasing to the eye. Intel down 4% today. It's interesting. You look at Intel. They saw this really nice rip higher, and a lot of activists got involved. They changed out the CEO. They changed out what they're doing in terms of a company. We saw this nice move, really just this lift off of the 52 range. And then you see it kind of move up, closed out of the position with the orange. The orange is a closing position at 60. So that was a nice move, right? Right from about 52, 53. If you can get it before that, that would have been hard because of the gap up. But it still was, you had the opportunity. Kind of a little bit of consolidation here. And then, let's kind of move this whole thing. Right there. And then you saw this consolidation that was in and out. This is not a trade that I would have taken on a daily basis. There was just too much choppiness in here. There was no clear direction. Very shallow overall aileron. Kind of didn't seem to really be beneficial. Silver, we talked about coin out. The IPO for Coinbase, obviously getting hit with Bitcoin. Down another 9. It was 400 all the way over here. People had to get in, rush in. Then it got down to 300, 200. VIPs, interesting, got caught up in that whole as I call it, the archegos, whatever you want to call it, thing with the hedge fund that kind of went under very quickly a couple of weeks ago. Well, this looks like that, if you get above this level of 3180, I would mark that down. I think you got an upside opportunity here. Some of the areas that you may want to continue looking at is charging stations. So this is Charge Point Holdings. We're starting to see, again, it come down. You got a triple bottom here, which is interesting. Not a lot of anything to hold. A lot of crappy positioning and momentum here. Picked up. Starting to see it pick up again. This is an interesting one that I would look at for a trade up to maybe 26. So, $3 on that 15% upside opportunity. I don't want to talk about them. Yeah. Roblox, interesting stock. Look them up. I really looked this up. RBLX. Look at what they do. Not much to go on here. Garmin. Boating is hot. They just closed the one of the contender factories and another boating manufacturer that can't get resin. Big problem. They sent everybody home. They just cannot get resin, and that is very interesting. They're pretty much sold out and can raise prices. GBTC, you can't really trade this pre-market as much as you can, depending on what platform you use. But down again at 39 and change. This is the Grayscale Bitcoin Trust. Looks just like Bitcoin, like I told you before. Sam Adams selling some hard seltzer. The seltzer is selling pretty well. And look at this chart. Beautiful chart long term. Seeing some decent upside on the momentum. Things are looking good in terms of the upside here. Up almost 7% pre-market. Up $84 pre-market. So this is an all-time high. I believe, let's see, 1330. Yeah, they're right at the all-time high from a couple days ago. Snap also beat up at $62 this morning. Pretty good. So some people want, let's see, TPL. Texas Pacific Limited. I don't even know what this stock does, but looks great for a while here. We're getting a kind of a pin down. I would wait to see if you can kind of hold the 1392. Obviously in a consolidation on a daily. The long term. Yeah, weekly looks good. Consolidation down from 1700. Looks like it could be drooping a little bit here on that to kind of come back a little bit. 1380. Interesting name. Real quick, we'll look at TIP also. Yeah, this is just a play on inflation. I like it. I think it should be in portfolios. Well, I shouldn't say it should be. I like it I have it in my portfolio. I think it's an interesting place to put some money for inflation protection as a part of that. Listen, thanks for joining me. We're going to stop it right there and tell you that we will be back again next week. And, of course, go over to triggercharts.com. Check out all the videos that we have available. Thanks so much for joining me. I'll see you again next week.